All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Inflation Day, everybody. Today is Wednesday, June 11th, 2025. We got the Consumer Price Index, or the CPI, for the month of May, and it was a beat to the downside. Inflation slightly lower than expected, down by most metrics. The headline number at 2.4% year over year, it was just below expectations of 2.5%. But it was also slightly up from last month at 2.3%. All that being said, by virtually every other metric, inflation was down from the prior month, slightly lower than expected. Again, let's throw that asterisk in there because I know I'm going to get it in the comments. Yes, guys, I know the CPI is a flawed statistic. I understand how owner's equivalent rent manipulates the data, and it's less reactive to market changes in asking rents. And yeah, I get all that, but this is what the market trades after. This is the only data we have. So this is the data we're going to report and analyze. Again, I get that asterisk. But look, what's going on here? The market is rallying on this news. We saw stocks moving higher. We saw the dollar moving lower. We saw interest rates moving slightly lower, and we saw gold moving slightly higher initially upon this release. That is the market saying rate cuts. Maybe the likelihood of a June rate cut creeping into expectations here. I still think the Fed is not going to act in June, but that's just me. But the market is getting a little bit more optimistic about Fed riding to the rescue here. Now, behind all that, if we take this CPI report and we take it in the context of what I consider to be a very weak jobs report that we got for the month of May last week, we see slowing inflation. We see a cooling labor market. These are all signs of economic weakness, not really something we should be all that excited about. But again, the market reacts pretty much to when is the money printer going to come back on, not to is the economy healthy and what do the companies that make up these indexes actually make at the end of the day. Now, meanwhile, we also got some movement in the trade war this morning. The U.S. and China have reached a trade deal, not a trade deal, depending on how you look at it. But we got a post from President Trump on Truth Social this morning talking about our deal is done. That's a little kind of sticking his neck out there. Look, basically, chips for rare earths, that appears to be the deal that was made here, as well as Chinese students will be allowed to get student visas to come to U.S. and steal our tech and bring their germs in from their girlfriends, to the whole wheat fungus thing. That's all very, very good and nice there. Also, some kind of questionable numbers in this Trump post on Truth Social saying things like we get 55% tariffs. We'll talk a little bit about those numbers and what that means. But for all intents and purposes, it looks like the trade talks in London went well. The market did not react at all to this news. The market reacted a little bit to the CPI news, but it did not react at all to this London deal, probably because the market has a little bit of tariff fatigue right now. Look, we supposedly had the deal in Geneva, and then that kind of went away. Now we got the same deal all over again in London. Is that deal going to go away? I don't know. The deal is supposedly subject to approval by President Trump and President Xi of China. Now, with Trump's tweet or post on Truth Social, he's kind of given it his tacit approval, although he hasn't formally approved anything. Xi Jinping could come and rug pull this thing right now and just say, no, I don't like the deal, back to square one. So again, is it a deal? Is it not a deal? It depends. It's getting kind of silly at this point, but that is news this morning. We've also got a lot of big tech headlines going on this morning, a lot of big tech headlines, and all these stories kind of taken together paints a pretty vivid picture. First off, we got an article in Bloomberg that is making some big warnings about big tech and depreciation. All right, the loss of value of the assets. Big tech has spent the last few years spending hundreds of billions of dollars on GPUs, on these Nvidia chips. And we just talked yesterday about how Amazon Web Services just cut the cost to rent one of those GPUs by almost half for these H100s, which means the value of these assets sitting on the balance sheets of big tech are all going to start getting written down. And when those assets get written down in value, it comes right out of the earnings of that company. And big tech has a massive depreciation expense on the horizon. And if anything, it's going to get worse, not better, based on that headline from AWS yesterday. Meanwhile, because that story, it seems like, hey, maybe because of this big depreciation expense, big tech might start cooling off on the capex and the rate, the great game of capex chicken. Let's see who can burn the most money on GPUs. Well, that leaves Nvidia needing somebody else to burn money. And well, if you're looking for somebody to burn money, who better than the group that wrote the book on the burning of money? Governments. And that is exactly what Nvidia is doing. Last month, they were touring the Middle East. Jensen Huang was making his stupid speeches talking about insane demand in the Middle East, trying to get governments to buy GPUs. This week, he's in Europe doing the same thing. Again, if you need somebody to burn money, who better than the government? We've also got Google is offering buyouts to employees. Well, Google has trouble because they've been burning so much money. You want to keep those CapEx numbers inflated. Why not just lay off your people? That way you can keep lighting money on fire for GPUs. Apparently, that's what's going on at Google here. Zuckerberg is spending $14 billion over at Meta to take a big chunk of Scale AI. Now, that's important. Scale AI, that company, I've talked about them a little bit on this channel, not a whole lot. But I got to wonder, is Meta slowly becoming a defense company here? There's been a couple of Meta headlines recently. Kind of makes me wonder, is Facebook getting into the weapons business? It's not so crazy when you look at who they're doing business with now. Also, we got another big nuclear AI deal going on. This time it is Talon Energy. They are the owner of the Susquehanna nuclear plant in Pennsylvania, and they cut a deal to expand their current power purchase agreement with Amazon for over 1,900 megawatts of electricity. That is most of the output of the Susquehanna nuclear plant is going to be going to Amazon's data centers. Now, look, we saw the same thing with Constellation in 3 Mile Island. We saw the same thing with Constellation in the Clinton nuclear power plant. So what is really going on here is the data centers are getting the power. And this is at the expense of the power plants that typically sell to, well, us, retail consumers. What does that mean? It means the pool of power that we have to bid on is getting smaller and smaller while big tech locks in power prices at today's rates. That means you and I, through higher electric bills, are going to be financing this ridiculous build out of AI. And it's not supposed to work that way. Pennsylvania and Illinois, where those Constellation plants are deregulated power markets where the power producers are supposed to sell their power to the retailers who then sell to consumers. They are not supposed to sell directly to big industrial consumers, leaving the rest of us to bid up higher prices on the remaining power, especially considering a lot of these power plants have been supported by taxpayer subsidies for the last few years. This is interesting. Sooner or later, these nuclear AI deals are going to end up in court because what they're doing is freaking illegal, and it is going to drive up electric prices for all of us. You can actually see that in the CPI. That was one of the things that went up more than the rest of everything in the inflation basket this month was electric prices. It's because of AI that's happening. So sooner or later, we're going to see these deals challenged in court. And we got a deal, or not a deal, a story from General Motors. GM is moving some vehicle production from Mexico back into the United States. It looks like car production will be moved. There's some idle plants that they're going to be spinning back up. Others, they're going to be expanding. So it looks like for the time being, tariffs, at least in this one little case, are having the desired effect on target. We will see some reshoring of manufacturing. It's unclear if those plants in Mexico are going to close because they might still make cars that they're going to export to other markets in Mexico. But for now, Detroit is getting a break courtesy of the tariffs. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning. And hey, if you don't mind, hit that like button and that subscribe button for the algorithm because we do this every day. So come on back and have your coffee with the melon heads tomorrow morning. And right now, the S&P is still in positive territory, up 16 points or 0.27%. Almost all of those gains came immediately following the CPI report. We've now given back some of those, but still the market is higher. It's also worth pointing out that somewhere in here was the announcement of the China trade deal. The market just did not care about that Trump post about the deal with China. It's kind of interesting. The Dow, same story here, higher by 70 points, 0.16% higher. All of that coming immediately following the CPI report. And the NASDAQ is higher by 71 points, or about a third of 1% higher, leading the way this morning, all off of that CPI. So stocks are heading higher here across the board this morning. That is being driven by prospects for a more dovish Fed, although we haven't heard anything from the Fed to this effect, but stocks are starting to price in a slightly higher likelihood of that rate cut in June. We're also seeing the same thing on the DXY. The dollar is weaker this morning, 0.28% lower or 28 basis points to the downside, 98.76 for the DXY, and falling here following the CPI report. And we've got interest rates are a little bit lower this morning as well. The 30-year is off by about 1.5 points, 4.925. The 10-year's at 4.431. That's lower by 4 points. The 2-year's at 3.956, lower by 5.5 points. And the 1 month is actually a fraction of a point higher here at 4.246. So we've got pretty much lower interest rates here. There's two ways you could interpret this. You could say, hey, this is the market being optimistic that there's going to be more rate cuts from the Federal Reserve. Or you could say this is a little bit of a safety trade, maybe people buying bonds for safety this morning. I don't really think the safety trade argument holds water here because we're also seeing stocks bid up. So I do think this is more an anticipatory trade based on perceived likelihood of Federal Reserve actions here. Meanwhile, we've got gold is a little bit higher this morning. Looking over at commodities, $18.20 higher for spot gold at $3,340. That's up by another 0.5% this morning. Spot silver, meanwhile, is a little bit lower by 0.33% after silver has had a wild week here. $36.41 for spot silver, down by 11 cents, but I still like the shiny. Copper's lower by about 1.9%. Platinum is higher by another 4.7%. Platinum has been ripping here. $1,269 for July platinum futures. Once again, shout out to Bob Coleman and David Morgan, both of whom came on this channel in May and called this run in platinum. Good call, gentlemen. Palladium is higher by about 0.9% this morning, and crude oil higher by another 2% here. $1.31 higher, 66.29 for July WTI futures. I saw no oil headlines this morning to explain this run in oil prices. Possibly that weaker dollar is leading to the higher oil prices this morning. Meanwhile, Bitcoin is a little bit lower here, but still hovering near all-time highs. $109,632 as priced on Coinbase. That's off by about $600 from yesterday. Pretty interesting story developing in Bitcoin, by the way. We've got famous short seller Jim Chanos is taking on Michael Saylor of MicroStrategy or Strategy, or the artist formerly known as MicroStrategy, whatever. There's this big blow up going on because Chanos has been shorting MicroStrategy stock, and it's pretty interesting. I think there's some takeaways from this story explaining the Saylor-Chanos clash of Wall Street heavyweights over MicroStrategy. They are two figures who command legendary status on Wall Street. In one corner stands Jim Chanos, a prominent investment manager who made his reputation with a history of controversial short-selling bets on the likes of Enron and Tesla. In other words, in the other corner stands Michael Saylor, the executive chairman of the company that used to be called MicroStrategy, the stock synonymous with Bitcoin, and the most passionate, well-known evangelist for the cryptocurrency. What are they arguing about? Well, they aren't disputing the value of Bitcoin per se. In May, Chanos addressed an investment conference in New York, during which he detailed the rationale behind his strategy of short-selling strategy stock and using the proceeds to invest in Bitcoin directly. Chanos contends that because MicroStrategy trades way in excess of the net asset value of its Bitcoin holdings, this is essentially an arbitrage, basically buying something for $1 and selling it for $2.50. MicroStrategy's share premium to net asset value was as high as 2.5 times in 2024 and currently stands at 1.7 times, which means if you're buying MicroStrategy if you're buying Bitcoin by buying MicroStrategy stock, you're overpaying for the Bitcoin because MicroStrategy trades at a huge premium to the underlying value of the Bitcoin it holds. So Chanos is shorting MicroStrategy, and when he makes money on that short, he's buying the Bitcoin directly. He is helping to close the gap between MicroStrategy stock and its underlying Bitcoin. For Chanos, the premium is a function of retail investors' frothy speculation, and he sees little to no value in the corporate wrapper Saylor uses to invest in Bitcoin. The market cap of Strategy is $109 billion, while it's holding 582,000 Bitcoin, ranking it among the top 5 globally, worth $63 billion. Now, Michael Saylor is adamant that Chanos fails to understand the business model, that it's not a holding company or a closed-end trust, but rather an operating company that has access to leverage. In the last year, Saylor has financially engineered several moves to fund purchases of Bitcoin through sales of common stock, convertible bonds, and preferred shares. And he committed to issuing more preferred stock to buy back shares in the open market, where its net asset value premium to decline significantly. So what Saylor's saying is, oh, we're an operating company. We deserve to trade on a multiple of the increase of Bitcoin's price because we can issue more debt and then buy more Bitcoin with that debt. Chanos is saying this is just a financially engineered arbitrage trade. I'm going to short it and buy the Bitcoin directly. Now, look, here's the deal. What MicroStrategy is doing is not unique. Maybe it used to be unique, but companies were buying MicroStrategy stock because they weren't allowed to buy Bitcoin. Well, now we've got Bitcoin ETFs, and we've got other companies are doing exactly the same thing. GameStop is doing what Strategy is doing, and there's more than 60 different publicly traded companies right now are doing this whole Bitcoin holding company gag that Michael Saylor innovated, if you want to use that word. So I kind of got to side with Chanos here. What Strategy's doing is becoming rapidly commoditized. Bitcoin holding companies are a dime a dozen, and there's no way Strategy should be trading at 1.7 times the value of its holding. It's overpriced here. Now, I am long-term, very long-term, bullish on Bitcoin. But remember, guys, Bitcoin winter is coming sometime in the next few months. Bitcoin winter will set in. And right now, Strategy is my leading contender for the FTX this time. Somebody big typically blows up within 18 months of a halving cycle. And right now, Strategy seems like the leading candidate for that. All right, let's talk about the CPI numbers that just came out. Inflation rate in the U.S. increased to 2.4% in May from 2.3% in April. That is your headline year-over-year number. So it is important to note that, let's refresh this because it's not reflected in the chart. There we go. All right. If you look at the chart, you will notice that the headline CPI number did increase. Inflation is up. That's not surprising. We've got tariffs on pretty much everything now. The 10% tariff set in. Those prices are starting to filter through to retail prices now. So all that being said, the increase in the headline number was actually really low, only 0.1%. Pretty much a rounding error here. So also I would point out that the market was expecting 2.5%. So yes, the number is an increase, but it is a decrease from a month, but it is below expectations. Now, on a month-over-month basis, the CPI in the U.S. increased just 0.1% in May of 2025 over the previous month. Now, the previous month, it was 0.2%. Again, we got to refresh here. So the month-over-month number went down, and it was below expectations. So on a monthly basis, CPI is trending in the right direction. Now let's look at core CPI, which strips out volatile food and energy. Core consumer prices in the United States increased by 2.8% in May of 2025. That is slightly lower than the expectations of 2.9% and flat versus a month ago. So core inflation went a whole bunch of nowhere. That is 3 consecutive months at 2.8% for core inflation year over year. On a monthly basis, core consumer prices in the U.S. rose by 0.1%. That is versus expectations of 0.3%. So core month-over-month inflation was much lower than anticipated, down from 0.2% last month. The market was expecting up here at 0.3%, didn't get it. So look, all things considered here, inflation was lower than expected and generally flat or lower versus a month ago. Let's look at some of the categories here. The all items index, there's your 2.4% year over year number, your 0.1 month over month. Food, which is one that is very important for lower income houses. Let's start with food at home, 2.2% year over year, up 0.3% month over month. So food at home continues to get more expensive. This disproportionately affects lower income households. And I would add it is still above the Fed's arbitrary 2% target. Meanwhile, food away from home, i.e. restaurants, getting more expensive here, up 0.3% for the month and 3.8% for the year. So restaurants still getting more expensive. Now, energy was a big drag on the index here, down 3.5% year over year or 1% month over month lower. Energy commodities led the way lower, particularly gasoline, down 12% versus a year ago and 2.6% lower for the month. So gasoline got a lot cheaper. That's going to give people a little bit of a break here. Now, one thing I want to point out, energy services still getting more expensive, 6.8% year over year. And within that category, we have got electricity higher by 4.5%. It's interesting, fuel getting cheaper, but electricity getting more expensive. That's because power plants take forever to build, and AI companies are gobbling up all of the power. And I would also add that utility piped gas services, even though it got a little bit cheaper last month, still much higher than it was a year ago, 15.3% higher for natural gas services to your house. Gee, you think maybe it's time we start building pipelines in this country again? I don't know. Let's wait until everybody's broke before we do anything about it. Also, we've got your core inflation here, 2.8% year over year, 0.1 for the month. Something kind of interesting here. New vehicles got cheaper last month, 0.3% for the month, lower, still up year over year by 0.4%. But new vehicles getting cheaper. Vehicles didn't get cheaper to make last month, that's for sure, not with tariffs going on. So what's going on here, guys? This is a function of people are broke. People can't afford cars. Cars are getting repossessed. And so new vehicle prices actually went down last month, and so did used vehicle prices, down 0.5% for the month of May, still slightly higher on an annual basis, 1.8% higher year over year. But look, we've got 3 consecutive months now of 0.5% or more declines in used cars and trucks. Got to send a shout out to Lach Ganapathy from Unicus Research, who has done a lot of work on auto delinquencies, and a lot of her sources talking about the creative ways that banks and car dealerships are hiding delinquencies and hiding inventory that's not selling. But you know what? You can't hide it in the price of the vehicles. 3 months in a row now, used cars getting cheaper. People just can't afford the payments, and so the cars ain't selling. We also had apparel got a little bit cheaper here, 0.9% for the year, 0.4% for the month. Services, let's see, shelter inflation, that one still getting higher here, 3.9% year over year, 0.3% for the month. Shelter, the largest single input into the CPI math, and also the biggest flaw in the CPI math because of owner's equivalent rent and the way that data is collected. It is a very much lagging indicator. It doesn't respond to changes in the asking rents that we see in the market here. And so this one, I think, is disproportionately skewing the inflation number higher, believe it or not, where it used to skew it much lower. I think right now this is actually making CPI higher than it would be otherwise. And we got transportation services, which is basically car insurance and airlines, airline tickets. That went down by 2% for the month, still 2.8% higher for the year. And medical care services, healthcare only ever gets more expensive because we just do it wrong here in this country. 3% higher for the year, 0.2% for the month. So all in all, inflation was a beat low. There's still some things in there to worry about, but not that bad. And stocks are reacting because Fed. All right, now what's going on in China? We got this one from President Trump on Truth Social this morning, all caps. Of course, our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied upfront by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me, even though he put a ban on that about 2 weeks ago. We are getting a total of 55% tariffs. China is getting 10%. Now, there was originally some concern there about that 55% number. That is higher than the previously advertised number. The White House has since clarified that 55% tariff, that is the tariffs that were already there from Trump's first term, combined with the new reciprocal tariffs that were agreed to in Geneva. So 55% tariffs for Chinese goods. China's putting 10% tariffs on our stuff, apparently. Relationship is excellent. I would use I describe the U.S.-Chinese relationship a lot of different ways. Excellent, probably not the word I would use. But hey, this is a salesman sales pitching his deal, so he's going to say it's excellent. Thank you for your attention to this matter. Gotta love the way he ends the email. Thank you for your attention to this matter, or thank you in advance. That's like how that passive-aggressive executive at your work that you really can't stand always ends his emails. Thank you in advance. Okay, you're welcome, Mr. President. So look, the market just didn't care about this. We'll see what Xi Jinping says about this. Now that Trump tweeted about it and said, oh, this is so great, there's a good chance Xi Jinping would just be petty and say, you know what, I don't like this deal, and torpedo the whole thing just to make Trump look bad. I would not rule it out. It's the 2020s. Also going on this morning, we've got AI bets that fueled big tech surge now threaten rich profits. Look out, shareholders of big tech. There is a storm brewing on the horizon, and that storm is called depreciation, hurricane depreciation. Some investors are questioning the amount of cash big tech is throwing at artificial intelligence, fueling concerns for profit margins and the risk that depreciation expenses will drag stocks down before companies can see investments pay off. On a cash flow basis, they've all stagnated because they're all collectively making massive bets on the future with all their capital, said Jim Morrow, founder and CEO of Callodine Capital Management. We focus a lot on balance sheets and cash flows. And so for us, they have lost their historical attractive cash flow dynamics. They're just not there anymore. There is a tsunami of depreciation coming, said Morrow, who is steering clear of the stocks because he sees profits deteriorating without a corresponding jump in revenue. Much of the money is going toward things like semiconductors, servers, and networking equipment that are critical for AI computing. However, this gear loses its value much faster than other depreciating assets like real estate. We saw that just yesterday with that article about AWS cutting the cost to rent an H100 GPU by up to 45%. The average H100 GPU in operation today is about 1 year old. Most of them were sold in 2024. That means they're down 45% in 1 freaking year. Yeah, you think maybe that thing's going to depreciate a little more rapidly than they anticipated? You better believe it. Microsoft, Alphabet, and Meta posted combined depreciation expenses of $15.6 billion in the first quarter, up from $11.4 billion a year ago. Add in Amazon, which has pumped more of its cash into capital spending in lieu of buybacks or dividends, and that number nearly doubles. People thought AI would be a monetization machine early on, but that hasn't been the case, said Rob Almeida, a global investment strategist at MFS Investment Management. There's not as fast of AI uptake as people thought. You better believe that depreciation is going to start taking a big chunk out of big tech. And it's going to last for a couple of years. It's not something that's going to be a one and done. That's going to take effect soon, and it's going to hit for a while. So if big tech is going to slow their rate of CapEx, that means Nvidia needs somebody else to burn cash, and who better than the government? Nvidia makes a big play for Europe with infrastructure deals. This one in CNBC this morning. Nvidia on Wednesday announced a slew of partnerships with European countries and companies spanning infrastructure to software as it looks to keep itself at the center of the global artificial intelligence story. Nvidia has been keen to position itself as an infrastructure company that can help countries and governments build data centers using its graphics processing units to unlock the potential of AI for local economies and populations. As part of that effort, Huang recently carried out similar whirlwind trips through the Middle East, where Nvidia is planning to sell its latest chips as part of big data center buildouts in Saudi Arabia and the United Arab Emirates. So if big tech won't burn the money, maybe the governments will, starting with the Middle East and then Europe. Whatever, just throw more money at data centers. Phase 3 profit. Meanwhile, Google is offering buyouts to employees across the company, including search. Search is kind of an important category over at Google, you may have noticed. Google on Tuesday offered buyouts to employees across several of its divisions, including those within its knowledge and information center engineering units, as well as marketing, research, and communications teams, CNBC learned. Knowledge and Information, or K&I, is the unit that houses Google's search, ads, and commerce divisions. The buyouts Tuesday are the company's latest effort to reduce headcount, which Google has continued to do in waves since laying off 12,000 employees in 2023. CNBC could not confirm how many employees were impacted by the latest round of buyouts. The information reported earlier that the company offered buyouts to employees in the search and ads unit. So they're laying off their people to save money to buy more GPUs that are depreciating much faster than expected, killing their cash flows. Big tech is just eating itself to keep this AI bubble going, to keep their share prices elevated. Sooner or later, they're going to reap the whirlwind for this. Meanwhile, Facebook, there is something going on over at Meta here, guys. This company is transforming, and I'm not sure I like what I'm seeing here. A frustrated Zuckerberg makes his biggest AI bet as Meta nears $14 billion stake in Scale AI and hires founder Wang. Mark Zuckerberg is so frustrated with Meta's standing in artificial intelligence that he's willing to spend billions of dollars to convince Scale AI CEO Alexander Wang to join his company. People familiar with the matter told CNBC. Meta is finalizing a deal to invest $14 billion into Scale AI, according to a person familiar with the matter who asked not to be named because the terms are confidential. Bloomberg reported earlier this week that the investment could top $10 billion, and a story from The Information on Tuesday said Meta would pay close to $15 billion. Now, I want to scroll all the way down here because Scale AI is a data labeling company. We'll talk more about that in a minute, but this paragraph is important. Scale AI has increasingly made inroads into the defense industry and in March announced a multi-million-dollar deal with the Department of Defense. In November, it collaborated with Meta on Defense Llama, a custom version of Meta's open-source Llama Foundation model designed specifically to support American national security missions, the company said in a blog post. So the biggest thing Scale AI does, and these guys have been in the press, Scale AI is a data labeling company. They'll take, like, for example, overhead photographs, aerial photographs, satellite photos, and they have people in cubicle farms in mostly poor countries that just go through these photographs and circle the tanks, circle the airplanes, circle the targets, if you will. And they're using this data labeling to train AI to autonomously select targets from the air. Now, Scale AI has also been in the news because they're violating all kinds of labor laws. They're treating these people in inhumane ways, and a lot of times they're not even paying them. So Scale AI has a lot of problems. But keep in mind, that is what Scale AI does. That's their bread and butter, data labeling, mostly for defense. Now, also keep in mind that it was just about 2 weeks ago that Meta cut a deal with Anduril. Now, Anduril is a new up-and-coming defense contractor that is founded by Palmer Luckey, a former Facebook employee. Facebook fired him because he donated money to a Trump super PAC, because that's big tech. And then Palmer Luckey went and founded Anduril, an up-and-coming defense firm. And Anduril focuses a lot on AI uses in autonomous drones. So you've got Meta cutting a deal with a guy they formally fired for being a Republican. That deal is for drones using their Oculus headsets. Now they're cutting a deal with Scale AI, who makes their money teaching drones how to pick out targets from the air. Meta's getting into the defense business here. That's interesting. And look, there's a lot of reasons I don't like Meta. I think they terrorize young girls. I think this company has a major, major ethics problem. And now they're getting into autonomous warfare here. So again, it doesn't mean they're automatically a defense company, but I see them positioning a lot of pieces to get into the weapons business. By the way, Anduril, this was just yesterday. Anduril CEO Palmer Luckey says the defense tech company will definitely go public. And look, guys, a lot of people don't like investing in defense names for a lot of reasons, for ethical reasons, because the business of destruction and death, I get it. But a lot of people also view World War III as inevitable because the Chinese and because Taiwan. And let me just say, if that conflict in the South China Sea doesn't happen, this company will be vital to the United States response if we decide to get involved, which I hope this war doesn't happen. But the way Anduril does business is totally reshaping the defense contracting industry. These guys move fast. They build weapons with their own money and then market them to the defense industry, whereas the rest of the defense industry goes to the government. They'll put out a request for prototypes, and then the government will fund the development of the prototype. And a few years later, they'll come back for comment. Anduril just builds stuff and then sells it to the government. So if this company does IPO, I predict this IPO would go very well. No plans on the timeline yet, but that is in the air. And we got to talk about this one. Talon Energy expands nuclear energy relationship with Amazon. Talon enters power purchase agreement for 1,920 megawatts of carbon-free electricity at full quantity to support Amazon operations and explore SMR technology. I would add that Talon Energy is basically a one power plant company. They own the Susquehanna nuclear reactor in Western Pennsylvania. That plant is about 2,500 megawatts. So they're selling almost the entire power plant to Amazon to power their data centers, which means that power will no longer be available on the grid, which means people won't be able to buy that power for their houses, which means residential electric prices will go higher while big tech enjoys lower prices courtesy of wholesale deals with the generators. They're not supposed to be able to do that in a deregulated power market. This is going to end up in court one day. Under the expanded power purchase agreement at full capacity, Talon will provide Amazon with 1,920 megawatts of carbon-free nuclear power through 2042, with options to further extend its duration. The power delivery schedule will ramp over time, expecting to achieve the full volume no later than 2032, with the potential to meaningfully accelerate. This long-term transaction will significantly decrease Talon's market risk and minimize its reliance on federal nuclear production tax credits. And the reason I highlight that last part there, minimize its reliance on federal nuclear production tax credits, that is your tax dollars have been financing this power plant, and now all of its power is going to Amazon, and you don't get a chance to bid on it. How does that make you feel? Our taxpayers is the average citizen getting a good deal on his investment in Talon Energy through these tax credits? It's supposed to be one pool of power that we all bid on equally. If big dogs are allowed to have their own market that's separate and cheaper from ours, then we don't really have a fair market. We have a rigged market for electricity. But Talon Energy is doing really well on this deal, higher by 7%, now 4.5% higher this morning, $266.59. Let's refresh that, make sure that's accurate. $267, up by 4.5%, $11 higher this morning on that deal. And last but not least, GM to invest $4 billion in U.S. plants amid tariffs for Mexican-produced vehicles. So it looks like we're finally seeing a little bit of reshoring of manufacturing, courtesy of this tariffs this morning. General Motors plans to invest $4 billion in 3 American assembly plants, including moving or increasing production of 2 Mexican-produced vehicles to U.S. plants. The Detroit automaker announced the plans Tuesday, as there have been few indications of progress in trade talks between the Trump administration and Mexican leaders. Earlier this year, President Trump implemented 25% tariffs on imported vehicles and 25% tariffs on many auto parts imported to the U.S. GM said the investment will add assembly of the gas-powered Chevy Blazer and Chevy Equinox that are currently produced in Mexico to 2 other plants in the U.S. and convert a large idled plant in Michigan, formerly expected to build all-electric trucks, to make gas-powered SUVs and trucks in 2027. GM declined to discuss the future of the Ramos Arizpe plant that currently produces the vehicles in Mexico. A source familiar with the plan said production of the Blazer will fully move to the U.S. from Mexico, while production of the Equinox is expected to be additive to the Mexican plant, which will also produce for other markets. The investment and moves will likely be hailed as a win for Trump's policies and automotive tariffs, which took effect on imported vehicles in April and many auto parts in May. So GM will be making more cars in America because of the tariffs. Is it too little, too late in this trade war? I don't know, but it's progress. Let's say at least somebody is looking to reshore some manufacturing. And I just want to say thank you very much to Pigo's Trading Desk, who says Facebook was DARPA. LifeLog, it's military. DARPA, that's the Defense Advanced Research Projects Administration. Is that what the A is in DARPA? Okay, well, the whole internet started as a DARPA project, so that's not too surprising. Most technology innovations start in the military and then work their way to engineering. If you think I'm kidding, the very phrase engineer, or work their way to civilian technology, the very phrase engineer or engine referred to military siege weaponry, all right? That was what an engine was. And then when engineers stopped building weapons, or at least started also building things like roads and bridges, the term civilian engineer was born, i.e. civil engineering, roads and infrastructure. So, I mean, engineers are by definition or by etymology, military innovators. So I'm not surprised that Facebook somehow traces its origins to the military, although I was under the impression Facebook was born in Harvard by a bunch of guys ripping each other off, but I could be wrong about that. Thank you, Pigo's Trading Desk, for supporting the channel, and thank you very much. Snowman, thank you for supporting the channel, says, I need 1 million melon coins for this report. Great work, Jack and the mods. Keep it up. Ah, yes, melon coin. Why not? It's the big, it's the next big thing. I'm going to start a crypto, call it melon coin. I'm going to hire a whole bunch of influencers to pump melon coin, drive its price higher, and then I'm going to dump it all and be like, oh, well, there was some technical thing went wrong, and oh, don't worry, this next project is going to be even better, and I'm as shocked as you are, and then walk away with millions of dollars That's how these meme coin scams usually go. And, well, it is the Wild West. It's a free-for-all in crypto these days, guys. The fraud gets thickest right before winter sets in, and that fraud is getting pretty thick out there. So, as always, be careful with your leverage when dealing with crypto. And thank you, Snowman, for supporting the channel. Wally says there isn't going to be a successful trade deal with the Chinese concerning the tariffs. The propaganda being said is just to not scare the markets. I would say there's a halfway decent case to be made for that. We'll see what the Chinese say. Now that Trump has invested a little bit of political capital with this post saying the deal is done, there's a very good chance the Chinese could just torpedo the deal just to make him look bad. Also, this deal doesn't really do anything. I mean, like 55% tariffs is hardly a win for the average consumer, although we are starting to see a little bit, GM moving that production to the U.S., but that's because of tariffs on Mexico, not because of tariffs on China. So the whole idea of reshoring manufacturing, bringing those factories back to the U.S., that is still a long, long way off, guys. And propaganda is just to not scare markets. I don't even see any reason to do that because the markets don't care about tariffs anymore. The S&P, the NASDAQ, they're all higher than they were before the tariffs were even announced. And the market did not even bat an eyelash at this announcement of a deal, not a deal this morning. So the markets just don't care, Wally. I mean, I don't see them moving at all on this news. But thank you, sir, for supporting the channel. And thank you, Eric Rocks, for supporting the channel as well. No comments here from Eric, just being a swell guy. Thank you so much, Eric, for supporting the channel. I don't know if that was a fat finger and you meant to type something before you sent it, but feel free to send me a message if there was meant to be a question on there, and I'll read that on the air. Thanks again, Eric. Pigo is back. He says, same propaganda in 2019. Remember Lordstown? Lordstown, that is the now defunct electric vehicle manufacturer. They're gone along with a lot of them. The one thing I think is different, I'm assuming this is talking about that GM story about moving the production back here. I believe that story is legit because of the fact that they're talking about building gas-powered engines there, because GM built that plant to build electric trucks, which there's just no demand for. And now they've got this whole plant sitting there depreciating, and they've got a 25% tariff on the cars that they make from Mexico. This makes sense to retool that plant to make gas-powered vehicles. It makes sense. Could there be some propaganda? Yes. Typically, the automakers don't do that as much as big tech does it. Like, everybody remember that Foxconn plant in Michigan that was going to get built? Yeah, about that. Remember Apple was going to invest all of this money to build iPhones in America? Yeah, about that. That never happened. And, of course, Taiwan Semiconductor has been 5 years away from building a chip fab in the United States for the last 10 years now. So I can see some of that propaganda making the promises of investment in the U.S. in order to gain political favor with the current administration and get favorable treatment elsewhere. Entirely plausible theory, Pigo, but there's also a lot of math that makes sense in this story from GM, where it's just a good business decision to do that. But as always, it's going to take a little while for anything to play out. So we'll see how that one actually turns out in the long run. Thank you again, Pigo, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. Appreciate all the super chats and the generosity, you guys. You rule. Thank you so much. Also, you, my magnanimous Melon Heads on YouTube and Patreon. Thank you guys for supporting the channel. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the algorithm. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.